Welcome to This Week in Money, the source for market opinions, brought to you by AmericanManganeseInc.com. Here is Phil Mackesy.
Peter Schiff is CEO of Euro-Pacific Precious Metals. He's online at EuroPacMetals.com. He hosts the Peter Schiff Show at SchiffRadio.com. And don't forget Peter's YouTube channel at YouTube.com/Schiff Report. And also the Vancouver Resource Investment Conference. It's coming up this Sunday and Monday. Peter's going to be there. You can find out more info at CambridgeHouse.com. Hey, Peter, it's good to have you back on This Week in Money.
Oh, thanks for having me back on.
Looking forward to your conference speech Monday at 3:30 in the afternoon. That's going to be interesting, and it's kind of thought-provoking here. The Canadian yuan, why Canada will divorce the U.S. and marry China. Let's start with your take on the relationship here. What's the problem here, and is it time for some mediation?
Well, I think the United States is a burden on the global economy. It's a burden on the Canadian economy. The Canadians trade with us, but we can't pay. We run a deficit. We print money. We're not producing enough. Meanwhile, in order to keep the Canadian dollar low, the Canadian government is basically following our misguided footsteps. You've got your interest rates too low, monetary policy is too loose. Contrast America with China. The Chinese are actually producing a lot of products that the Canadians want, that the Canadians need. And so why not trade with people who can afford to pay?
Just got some news here, Peter, from the International Monetary Fund saying that our economy is going to underperform in 2013. Is that just going to make things worse between Canada and the U.S.?
Which economy are you talking about, the Canadian or the U.S.?
Yeah, the Canadian economy. And we can probably assume the U.S. economy is going to underperform as well, right?
Well, the U.S. economy isn't going to perform. It can't. I mean, all we're doing is borrowing money and spending it. It's the government that's getting bigger. And so because we're growing our government, we're growing our debts, our real economy and our capacity to produce is being diminished. And I think to the extent that Canada is preoccupied with not allowing the Canadian dollar to appreciate against the dollar, which I think that's the case, then we're going to be dragging Canada down with us, although I don't think that the Canadian economy will suffer as much as the U.S. economy. But the Canadian economy would do much better if they just abandoned these ideas. But, I mean, they're very contagious. Look what they're doing in Japan. I mean, the Japanese feel that what they need to do to stimulate their economy is print a bunch of yen to debase the value of their currency, and they want to do that by buying a bunch of U.S. government bonds or European government bonds. I mean, it makes no sense to lend money to countries that are broke, and you think that somehow that's going to grow your own economy.
We're talking to Peter Schiff here on This Week in Money, and leading the economic news this week, the $1 trillion platinum coin, Peter, one of the craziest ideas I've heard for quite a while, is officially off the table. Neither the Fed or the Treasury like the idea much.
Yeah, they don't like it because it basically shines a light of truth on what they're doing anyway. Because basically that's what we're doing. We're minting $1 trillion coins. We're creating money out of nothing. So what? It's backed by U.S. government debt, but what's that worth? It's just one piece of paper that's backed by another piece of paper. I mean, what is U.S. government debt worth? Nothing, because all they're going to do is pay you in U.S. dollars. And what? The U.S. dollars are backed by more government debt? So, the whole idea that we have a real monetary system is wrong, and maybe that's why they opposed the platinum coin, because it simply displays the absurdity about what we're doing.
Here's an even crazier idea, Peter. Selling gold from Fort Knox. $100 billion a month is what the government's borrowing. If there's $400 billion in Fort Knox, so that's about 4 months' worth of supply. Is that dumber or smarter than the platinum coin idea?
That would be pretty stupid to basically sell all of our gold in 4 months. Then what would we do? We'd be out of gold. We'd really be in trouble. The U.S. government should be buying gold. That we're going to need every ounce. When the dollar collapses, we're going to have something to act as money, something to back our currency, something to use to import with if we can't export. So no, we need to hold on to every ounce. In fact, we need to buy as much gold as the world is dumb enough to sell us for dollars.
Peter, we got some brave talk from the White House this week. 2 options to deal with the debt limit. They say Congress can pay its bills, or it can fail to act and put the nation into default. Is that a little kind of mongering a little hysteria, you think?
Well, I don't even think it's honest, because paying our bills isn't even an option that's on the table. Remember, raising the debt ceiling is not about paying our bills. It's about not paying our bills. It's about borrowing money instead of paying our bills. That's what happens when we raise the debt ceiling. If we actually could pay our bills, we wouldn't need to raise the debt ceiling because we'd have the money. It's because we can't afford to pay our bills. That's why we raise the debt ceiling, so we can borrow the money that we don't have.
Pretty good bet here, Peter, that the debt ceiling is going to keep going up. We've got some more news here from Chicago Fed President Charles Evans. He says U.S. should keep policy accommodative, in his words, to support the economy.
Well, you don't support the economy by printing money. You support the government. You support the government's ability to undermine the economy. But what you're doing is you're stifling real economic growth. You're creating inflation. You're diminishing the value of and the incentive to save. The best thing that we could do to stimulate the economy would be to shrink government spending, including the government spending that's being financed by cheap money. We should let interest rates rise so that we have a better return on savings, so that more people are encouraged to save, so that people won't just borrow money to consume because interest rates will be higher and will discourage that. There will be more of a reward for savings. And if we have more people saving, we'll have more money available to invest to grow the economy so that we can have higher standard of livings and better employment opportunities. Instead, we undermine all that by allowing the government to confiscate wealth by creating inflation.
What we're really doing here, Peter, is debasing the currency, and we're just calling it inflation, right? Because that sounds less threatening than debasement.
Well, they don't even want to call it inflation. They call it quantitative easing. But in Japan, they're actually saying they want inflation, which is the stupidest thing. That's what they want. In fact, I read this article. I was in Bloomberg yesterday. It said that Japan is suffering because prices are falling by 0.1% a month.
Wow.
So that's about 1% a year. You're suffering because of that? And they actually think that people in Japan are not buying stuff because they think if they wait a year, they can get it 1% cheaper. I mean, I'm really hungry, but I'm not going to eat anything because if I wait, I can get my food 1% cheaper. Like, I need a brand new car. I'm driving around in this piece of crap, but I'm not going to buy it because if I wait a year and if I keep driving this lousy car for a year, next year I can get it 1% cheaper. I mean, these guys are nuts. The only thing Japan's got going for it is that they don't have inflation. Now they want to take that away.
Hey, this is interesting, Peter. Japan about to overtake China as the largest foreign holder of U.S. government debt. Now, that is going to be significant.
Yeah, and there's a new rumor that they want to start buying another $500 billion of our debt. That's their stimulus plan. Print money and loan it to us. Loan it to America so that we can blow it, and somehow their own country is going to be more prosperous because they squander hundreds of billions on U.S. treasuries. Look, the whole world has gone insane, right? And this is the unfortunate consequence of democracy. This is who the people vote for. That's why in America we were supposed to be a republic. The founding fathers wanted to protect America from democracy because they knew how foolishly leaders act when they have to get elected by the populace. And they knew that democracies always collapse because people are dumb enough to vote for the same people that we're elected now that pursue these ridiculous policies.
Peter Schiff, our guest here on This Week in Money, and of course, Fiscal Cliff 2, the sequel. It's coming in March. Here, the president firing off the first shot this week in his press conference, saying he wants to increase the debt ceiling, says, quote, and I want to get your take on this, Peter, investors around the world will ask if the USA is in fact a safe bet. Markets could go haywire and interest rates would spike.
Well, they will eventually, not because we fail to raise the debt ceiling, but because we succeed. I mean, that's the message that we send. If we raise the debt ceiling in perpetuity, we're sending a message to the world that we will never pay our bills, that we will simply go deeper into debt to avoid paying our bills, and the only thing that's going to force us to stop is going to be a currency crisis, a sovereign debt crisis. It's going to be foreigners refusing to buy our bonds, refusing to buy our currency. But as long as the world is dumb enough to lend America money, America will keep on spending it. But the world is never going to get paid back because we will default one way or another. Either we will default by not paying or we will default by inflating. But there is no way our creditors are going to get their purchasing power back.
Peter, how's this work? Here's the president saying this week, any vote to increase the debt ceiling does not necessarily mean more spending. Is that believable?
Huh? Of course. That's exactly what it means. Look, if a politician says it, there's no point in believing it, right? Anything they say is unbelievable. In fact, you hear the president speaking. he's talking as if he's actually cut the deficit. The deficit is exploding. It's kind of like right out of a George Orwell novel. Mm-hmm. It's doublespeak.
Peter Schiff, our guest here on This Week in Money, and one of the people leaving Washington the next week or so, Treasury Secretary Tim Geithner. He's packing his stuff, and here's Obama again. Tim Geithner going to go down as one of our finest secretaries of the Treasury.
There is no Treasury. If he was actually a decent Secretary of the Treasury, he would have admitted that we were broke. He would have informed his boss that the Treasury is bare. He's not the Secretary of the Treasury. He's the Secretary of the Debt, because that's all we have. We have no treasure, right? We just have debt. And, the job of the Secretary of the Treasury now is not, to try to maintain the solvency of our nation, but basically to act as a cheerleader for the president, to try to rubber stamp his policies and try to convince the rest of the world to keep lending us money, even though we're broke and we can't pay it back.
How about the new guy, Jack Lew? Any different from Geithner?
I doubt it. I mean, this guy's barely even worked in the private sector. He worked on Wall Street for a few years. In fact, it's interesting. I think he worked at Citibank, and during the time that he was there, the brief 3 or 4 years he was there, the stock price dropped like 95%. And if it wasn't for a government bailout, they probably would have gone bankrupt. So he's parlaying that experience, helping to guide a company into bankruptcy, into a cushy government job. But he's had other cushy government jobs his whole life. So yeah, I guess he's an incompetent failure. In fact, when he was the head of the Office of Management and Budget, he actually said, with a straight face to Congress, if they passed the president's budget, by now we'd be in surplus and we'd be paying off the national debt. So, either he's a liar or he's incompetent or he's a combination of both, which probably means he's ideally, uniquely qualified or ideally qualified to be Secretary of the Treasury, because being a liar and being incompetent are very important qualities in that office.
Peter Schiff, our guest here on This Week in Money. Reminder, the Vancouver Resource Investment Conference coming up this Sunday and Monday here in Vancouver, the world's largest resource conference. And, of course, the focus is going to be on gold and silver. And that's a subject that hits home to you. You've said for a long time, we should hold at least 10% of our portfolios in gold and silver.
At least, and when you hear people like Obama talk or Geithner or whoever, you want to buy even more. Look, you can't trust a politician with a printing press. These central bankers are going to destroy the currencies all around the world. And it's important that people buy gold and silver while they still can afford it, before the price takes off. And, people can buy from me. I have my own company, Euro Pacific Precious Metals, EuroPackMetals.com, or just go to SchiffGold.com. And that's my company, the website for my precious metals company.
Let's look at what's happening with gold and silver. Peter, last week on CNBC, you said short term they look pretty good. You think we've had a pullback. What now?
Well, I think we consolidate, but go higher. I think the dollar, with the exception of the yen right now, the dollar is still looking weak against other fiat currencies. That's a good environment. Commodity prices, industrial metals have been strong. Oil prices have been strong. And all the world's major central banks are printing. The dollar is now falling against the euro. The euro hit an 11-month high today. So I think that if the pressure is now off the euro and back on the dollar, that is, again, a better environment for gold and silver.
Peter Schiff is CEO of Euro Pacific Precious Metals. He's online at EuroPack Metals. He hosts the Peter Schiff Show at SchiffRadio.com. Don't forget, Peter is at the Vancouver Resource Investment Conference this Sunday and Monday, January 21st. He'll be able to see him Monday at 3:30. You can get more information at CambridgeHouse.com. Hey, Peter, thank you for taking the time today. I appreciate it.
Hey, anytime.
This Week in Money is archived online at TalkDigitalNetwork.com.
Robert Campbell wrote Timing the Real Estate Market. He publishes the Campbell Real Estate Timing Letter. The January issue's out now, featuring market timing signals for 17 major U.S. cities. And you can find him online at realestatetiming.com. Hey, Bob, it's good to have you back on This Week in Money.
Thank you very much.
Big news this week. U.S. housing starts rising by 12% in December, the fastest pace in over 4 years. Bob, is a recovery underway in the U.S., and can we sustain it?
Absolutely. Whether we can sustain it or not is basically a function of Fed policy, Phil. So that remains to be seen. But that all the gears are in motion for a recovering housing market. In fact, the trends are accelerating right now.
Tell us.
So I anticipate that 2013 could turn out to be a very good year.
Bob, tell us about some of the trends that you're seeing down there.
Well, the fundamentals, some of the the key indicators that I follow, one of my first indicators is existing home sales. And that has been on a upward trend, very nice upward trend for a couple years now. So that's strong. On the supply side, the inventory has been falling steadily, Phil. So for the last 2 or 3 years, and year over year, I think the November reading was down 17.5%. But prior to that, it was down in the previous 6 months. It's been down in the 20%. So what you're essentially seeing is increasing demand and decreasing supply, and which is very consistent with the fact that where mortgage rates are right now is below 3.5%.
Wow.
So in over 75% of the cities in the United States, when you factor in all the relevant costs and write-offs for owning a home, it's cheaper to own right now than it is rent.
Bob, obviously those record low mortgage rates have got to be a huge factor in what's going on down there.
Oh, absolutely, Phil. I mean, my goodness, since the Fed started QEing in 2008, I believe mortgage rates have dropped almost 3%. So that's made a huge difference in the economics of owning a home, and that's played a big factor in the affordability, which is at near record highs right now. When you look at and that's especially fascinating considering that incomes have essentially been flat to down. So the only way that the Fed can engineer a recovery in the housing market, which they hope will stimulate the economy via the housing market, more jobs than that, is to get interest rates low enough where housing will start to appreciate and people start building homes again. But on the flip side of that, look at this. I mean, that clearly in my mind that this is a artificially, if use the word artificial, if you would, Fed-driven rally in the housing market. And if interest rates were simply to back up, to go from 3.5% where they are now back up to 5.5%, a total of 2% rise, that would whack 21% off of housing prices, everything else being equal. And I think we all know the direction that incomes are going in the United States.
Sure.
They're doing their very best to hold their own, so they're going flat. So if interest rates were to back up, it would be a real killer for the market.
Robert Campbell from realestatetiming.com, our guest here on This Week in Money. Let's talk sentiment for a second here, Bob. We've got some new information from the National Association of Home Builders, the Wells Fargo Housing Market Index, 47 in January. It is below 50, and that's the level that indicates that builders are more optimistic. What's the feeling among builders out there?
Well, even though the reading, didn't move from the December 47 reading, what you have to look at is the trend, and the trend has just been on a barn burner for the last year. In fact, the trend has never gone up so quickly. So clearly, the home builders are getting more and more optimistic, which is a pure reflection what they see in the marketplace, and it's a true reflection based on the metrics that I'm following.
Bob, let's look at the recovery itself. You say in the newsletter it's gaining momentum. You're quoting the Case-Shiller 20-city composite. Give us a look at what's happening with the Case-Shiller.
Well, Case-Shiller is a 3-month moving average of the last 3 months, and it's unweighted. But that in each of the last 6 months that the 20-city composite has been measured, that it has gained strength in as much on a year-over-year basis. It keeps turning into a bigger number, and that's why I say that it is gaining momentum. In other words, the train, so to speak, is picking up speed with respect to price appreciation.
Okay, so in some places, home prices actually fell, according to Case-Shiller.
Right. I mean, I think on a month-to-month basis, I think out of the 20 cities that they follow, and 12 of them fell on a month-to-month basis. But that's strictly for seasonal purposes, Phil. That prices tend to fall in the winter and the fall, and then start to rise in the spring and summer seasons. But looking at prices on a year-over-year basis, which is the best way to measure trends, 18 of the 20 housing markets are higher year over year, and only 2 are down year over year.
Okay, Bob, so the purpose of your letter is to help us look at where the housing market is, to look at the bottoms and the peaks, and let us know when to buy low and when to sell. How is the American housing market? Let's talk specifically about Canadian investors. We've talked about this before, but the idea of Canadians investing in the U.S. Where are the opportunities for Canadians? Are there less opportunities than there were, say, 6 months ago?
Well, in some areas, like I know they like to come down and buy in the Sun Belt areas. Mm-hmm. For Phoenix, for example, Phoenix has been the hottest real estate market in the United States, major market in the United States for the last year and a half, and I believe it's up over 20%. Year over year. So that market's really doing well. Las Vegas is starting to come out of the doldrums, and if I was looking for a sleeper, it would be Las Vegas.
Okay.
Miami's doing very well, and but all those cities, it's hard to tell which of those, the cities that are doing the best are the cities, the major cities that are doing the best, Phil, are those cities, like the 3 I just named, that were hardest hit during the bubble.
Sure.
Particularly like Las Vegas. It fell peak to trough, 70%. I think Phoenix was a close second, coming in around 60%. Miami probably fell 55, 60%. So those markets have come back strongest because they fell the hardest. And in those areas there, income certainly didn't fall that much, so the affordability factor in those areas is just tremendous right now. For example, you can go in the 6 months ago, you could go into the Phoenix market and you could buy a house for, $80,000 to $90,000, and the thing would rent for over $1,000.
Wow.
Well, at today's mortgage rates, that was a tremendous cash flow. And being as incomes haven't come down, it made those homes extremely affordable in the Phoenix area, and that we're starting to see that now in the Las Vegas area because incomes haven't fallen as much as housing prices had, and that's what's fueling the rebound.
Bob Campbell, our guest here on This Week in Money. Lots of talk these days about the fiscal cliff and the debt ceiling, the national debt problem, a huge problem. How does that weigh on housing down there?
Well, most people don't even know what's going on with respect to that, with respect to the fiscal cliff. But you may have noticed in this issue I talked about the macro picture for the U.S. economy and 3 charts that tell the story. And I think ultimately what we're looking at, and the 3 charts that told the story in that issue, we're facing, what's happening to incomes, where we are with respect to unfunded liabilities in this country, and I forget what the 3rd chart is, but we face the fiscal cliff that was avoided this time is about 1% to 2% of the problem that we really face. We're facing here in the United States, just on the unfunded liability side, Phil, so between $100 to $200 trillion worth of unfunded liabilities.
Wow.
And those are either going to have to be dealt with by cutting benefits, by increasing taxes, and I'm talking about significant cuts or significant increases of taxes, or some combination of both, or they're just going to have to print up the money and fund it by money creation. And that ultimately is what I think that they're going to be forced to go to, because the Fed's not going to willfully crash the U.S. economy. So they're just going to inflate their way out of this, and eventually that's going to lead to a currency crisis that's going to lead to a rapid rise in interest rates that's going to kill off the economy and especially the housing market.
Bob, I love this quote from P.J. O'Rourke in your newsletter. To expect Washington to reform itself and rein in spending is like giving your car keys, your credit card, and a bottle of Jack Daniels to your 17-year-old son and expecting him to act responsibly.
Right. That's exactly what we're looking at. Because what these guys are doing, these guys, as everybody knows, that they're not going to do the responsible thing. Nobody's talking about, the degree of the problem that exists out there, because it's political suicide for them. So they're just going to keep kicking down the can down the road until it becomes bigger and bigger a problem, until they absolutely can't do anything about it except increase the printing press to the point where the currency crashes and the U.S. dollar gets devalued, which I think is going going to happen. I'm almost 100% certain that's going to happen at some point in the future, that I just can't give you the exact timing. But when it does, it's going to be devastating, and that's going to cause the economic reset. And from a standpoint, after that event occurs, that's when I think is going to be the ultimate buy signal for buying real estate, assuming you've got your assets in the right asset classes, because essentially financing is going to dry up, Phil, and the real estate market is going to, values are going to drop down to their cash equivalent because financing's not available. And that's going to be the next big buying opportunity.
Bob, as things get crazier down there, tell us how we can make some sense out of all this. Tell us how we can subscribe to the Campbell Real Estate Timing Letter.
Go to my real estate website, which is realestatetiming.com, and it tells you all about exactly what I do, the 17 different cities that I cover, how you can get my book, Timing the Real Estate Market, for free. You can read a couple sample issues, tells you something about myself, everything that's in the book, and you can get a real good idea of the key indicators that I use, that I follow to make to track the markets and to a high degree of accuracy, tell you when the peaks and where the bottoms are.
Bob Campbell, it is always a pleasure to talk to you. Thank you, my friend.
Thank you very much, too. Bye.
This Week in Money is archived online at talkdigitalnetwork.com.
Larry Ray is CEO of American Manganese. He's online at AmericanManganeseInc.com. Larry has almost 50 years' experience in the mining industry, so we are always glad to hear what he has to say. Hey, Larry, welcome back to This Week in Money.
Well, thank you, Phil. I'm glad to be able to talk to you.
Want to disclose up front that you sponsor the show, and we certainly appreciate your support. Now, American Manganese produces electrolytic manganese for use in lithium-ion batteries. They've been in the news a lot lately. Problems with Boeing's new 787 Dreamliner have grounded almost all of the 787s in use around the world. Initial inspection of that Japanese 787 found that the battery electrolyte leaked from the plane's main lithium-ion battery. And we want to basically cover the good, the bad, and the ugly here. Let's start with the good, Larry. Why are lithium-ion batteries so popular?
Well, they certainly are. I can talk a lot better about the lithium manganese ion battery. But first of all, let's just explain something about the battery ion family. The lithium ion is a family of batteries, of at least a half a dozen, and they can either use, in the case of the Boeing 787, that is, I think they're all grounded now. They used a lithium cobalt battery, and of course that's the same battery you use in your computers and your cell phones. And so it wasn't the lithiated manganese battery that's currently being used in the Chevy Volt.
Okay.
It's a different battery entirely. Now, when we talk about a family of batteries, there's lithium cobalt, there's lithium aluminum, there's lithium manganese. There's various batteries out there, and they should not be confused. They all have their own properties, and they all, have their own advantages over each other. Of course, we're going to be a little bit bias and say we think the lithiated manganese battery, which is receiving most of the attention today, especially in the EV and the HAV market, is probably the one that's in the lead. Now, as you know, as you're flying in the air, you don't want to have a battery fire, and that's in reality, there were a few of the batteries had caught fire. I don't know whether it was one or three, and then the FAA decided that was too catastrophic an event to allow those planes to fly until they solved their problems. So you can imagine how this is affecting Boeing and also affecting the battery manufacturer in Japan. The company, I think, was GS Yasuda, and they make the battery. And, all these things, of course, have a backlash. So what do we have to say about it? Well, I see an advantage to move our project a little further along the line in the fact that we actually have a deposit at a Tillery Peak that we had a successful pilot plant test on. We successfully took that material, the carbonate, and we made EMM, EMD, and most recently CMD. Now, CMD is EMM is electrolytic manganese metal. EMD is electrolytic manganese dioxide used in the battery industry, and CMD is chemical manganese dioxide used in the battery industry. Now, you've seen that there's been fires in the lithiated manganese battery in the past. Not that many, but there has been a few.
Mm-hmm.
One in a million is too many in the battery industry. And our research contractor, Cametco Research, Inc., is of the belief that those battery fires or thermal runaway was caused by the introduction of small particles of metal in the processing department. And that all the conventional EMD producers today use, heavy crushing, heavy grinding before they're able to roast it, and then use sulfuric acid to leach it. And that introduces these particles of metal. And even 1 part per billion, and that's billion, of steel is too much for the battery industry. Cametco feels our process eliminates all that. It's a hydrometallurgical process. Our ore is very soft and friable, so it doesn't go through any heavy crushing, no grinding whatsoever. It goes straight into the leach, and it's leached by sulfuric acid. So we don't introduce these products. It's kind of like the baker who's baking cakes, and when he finds a weevil in his flour, he gets rid of the whole bag of flour, and he starts on a new bag of flour. And with the batteries, you don't know if you've got that small little particle of steel in the mix that could cause a short, that could burn out the battery. So it's best to eliminate it from the process side. That's the downstream. And then the upstream side is the process, and the downstream is how you treat it after that. But certainly chemical manganese dioxide is the best way to go, because there's no mechanical function. You're only adding, in most cases, a kind of a bleach that makes the CMD. And if you go back a couple of months ago, you'll see that we did announce that we had actually taken CMD from the Artillery Peak resources in our pilot plant test, and actually successfully made rechargeable lithium-ion batteries. So what I'm saying is that please don't confuse the different battery types as all being under one label. They're definitely not under one label. And I think that, we could actually introduce our product, would make a safe product for introduction to the airlines.
Am I reading this right, Larry, that the lithium-ion batteries, not necessarily the Boeing ones, but generally lithium-ion batteries are about 60% manganese by weight?
Lithium manganese, well, certainly the lithium manganese battery is 64% by weight. So, the lithium is about 4% by weight.
Now, obviously, lithium is not going to go away. I mean, the reason they're using these things in the Dreamliner, the thing is made of carbon composite fiber. The whole advantage of lithium-ion batteries is that they're so much lighter than conventional lead-acid batteries.
That is true. And, of course, the lithium cobalt battery that was used at the Dreamliner, for example, is lighter and has more density of energy. So that's why it was chosen, even though that it's unfortunate that battery, as you know, has failed in a lot of laptop computers and cell phones. And, it's right to the point of where, if it's very, very hot, like it was at 40 degrees in Australia not too long ago, people were cautioned to shut their cell phones off and not use them because of thermal buildup and thermal runaway. And once you have a thermal runaway and the lithium cobalt battery, there's, as far as I know, and I could be wrong, I could be corrected on this, there's no way of actually stopping that from burning out.
Yeah, one of the things I was surprised to find out earlier today, that the fires that the lithium-ion batteries generate are hard to put out. The conventional fire extinguishers don't work. That fire in Boston took 40 minutes before they had it under control.
Yeah, there's it feeds on itself. I don't know exactly what the chemistry is that makes it so difficult to put out, except that once it starts to heat up, the only thing you can do is get rid of it. Yeah. Because it's going to burn. Here's
one other thing I found out this morning, that the 787's batteries generate more electrical power than any other airplane. And they do that to burn 20% less fuel. It seems like a good idea on the surface of it, and we can't really go back from that, can we?
Well, I don't think there's any going back from that. They're going to have to move along. Certainly, there's been a lot of research in the lithium manganese battery that's making it, making the actual amount of power that can be stored and the amount of power it can deliver at greater amounts than previously known. But again, you have to say to yourself, we got to look at the flour we're using in the cake mix.
Yeah.
It's got weevils in it. Nobody's going to want the cake, right? But nobody's doing that. Norm Chow, who's the president of our research contractor, gave a paper at the Battery Summit in, I think it was in October or November, and he found that nobody at that summit even thought about how the EMD they were using in their research was made, mined and made, and what it could introduce at that stage. So they have to go back and look at the actual product and how it's made and how it can be particle-free.
Larry Reaugh from AmericanManganeseInc.com, our guest here on This Week in Money. Boeing shares not affected much by what's going on. They're only down about 50 cents this week. They're calling it another teething issue. And I'm wondering where Boeing goes from here. What kind of things can they do?
Well, Boeing is going to have to, if they want to keep these planes going, they're going to have to invest more in research and not outsource that so much. Mm-hmm. Certainly the battery makers are going to start looking at the product that they're utilizing to bring these great technologies forward. If the product's got any fault in it, then that's inherent. That's built into the project, whether it's got the greatest technical advancements in the world.
Case, you're thinking about North American use of the Dreamliner. United Airlines has 6. They're the only American carrier flying the Dreamliner. Air Canada has ordered 37 Dreamliners, the first plane to be delivered next year. And we should also mention that the new Airbus A350 also relies on lithium-ion batteries. So this is not just a Boeing problem.
No, it's not a Boeing problem, but it's probably a little too early for the airline industry. Especially weight savings is very critical to the airline services, but it has to compensate for itself or in the safety aspect of it.
Larry Reaugh, our guest here on This Week in Money. Larry, the Vancouver Resource Investment Conference coming up this weekend, the world's largest investor-focused resource exploration conference. That's going to be at the Canada Harbour Place. Listen to who's going to be here. David Morgan, Marin Katusa, Sean Broderick, Danielle Park, Rick Rule, Doug Casey, Peter Schiff. A lot of great folks going to be there.
Well, I'm going to be dropping down there on Monday. This year we don't have a booth. We need a market before I'll spend the money on booths, but I'd like to go around and meet and greet people that in the industry that only get to see when I go to conferences. And I've always liked the Cambridge show. And when the investors' appetite turns around, which I think is probably happening as we speak, then I will, have my presence certainly at the Cambridge House.
Question a lot of folks are going to be asking at the conference this weekend, and I'm sure they're going to be asking you and a lot of other folks, if the gold sector is doing so well, if gold and silver are doing so great, why have gold stocks continued to underperform? What's going on in the mining business?
Well, it's a real phenomenon. I mean, this whole decade has been one of relearning what we learned in the last 40 years. And that is, the investors are just not as aware of the new investors are not as aware of the mining aspect and the actually how gold affects the currencies. It is the longest lasting currency, that it is the last line of defense against inflation and certainly devaluation of currencies. And yet, these gold stocks that used to trade at multiples to the gold price are dismal. And also affecting that, of course, is the high cost of capital to put one into production, the high cost of operating one today. Certainly, safety issues have... I was a safety engineer for several years at a very large mine. And the safety issues now have reached a proportion of absurdity. Where it's slowing down production, it's adding costs to the bottom line. These are just some of the things. Of course, environmentally, when we're doing the CapEx, and I'm a proponent of a good safety practice in and environmental practices. But you just got to know where to draw the line.
Yeah.
In the sand, there's certain things that are redundant, and they're just adding to the costs. So profits are not what they used to be.
Larry Reaugh, our guest here on This Week in Money. Let's talk bullion for a second here, Larry. What's been going on this week? Gold consolidating after a nice week. The price up by 1.5%. Best since mid-November. Silver also having its best week since November. It is up 5% this week.
Well, silver is the poor man's gold. You're starting to see that in India, where a lot of people are switching from buying gold to buying silver. And, rather than say a poor man's gold, it's another form of currency. It was a currency for a long time. You remember we used to have silver dollars and silver dimes and silver quarters, and that's been debased now to nothing. And of course, we keep debasing the money, and the reality is that we're going to be probably somewhere in the future we'll see copper back in it as a coinage, and that will be our currency until we actually back a new paper currency with gold.
Larry, it's been a while since we talked about Amy and what's going on with Artillery Peak. We know electrolytic manganese is trading at around $1.50 a pound. What's happening down in Arizona?
Well, electrolytic manganese metal actually is trading below $1.10 a pound. The consolidation in China and the overproduction that led up before the consolidation has been hurting all the producers of electrolytic manganese metal, including those in China. Everything I'm reading is that they're producing at less than their costs. So that can't go on, but they have to get rid of that glut. What's happening in Arizona? Well, I just put a press release out, and we're going to be looking at identifying higher grade areas in which to open pit, which would reduce our footprint and overall capital costs and operating costs with a higher grade material, and we do have areas that indicate that potential exists. But going forward, we're going to be spending a lot of effort on identifying and trying to bring in a suitable partner for all the reasons I just talked about in the battery industry, and to help us fund the ongoing work that we're going to be doing on the project. Now, they're also going to be advancing our R&D research, and there will be some applications made. We've got good feedback that we'll be getting some R&D money, and we'll be moving ahead with certainly with the CMD production. CMD, just to give you a brief outline of it, EMM is a pound per pound of metal to produce it from the ore. And EMD is only 0.6 of a pound from the ore. So that's an automatic 40% reduction in footprint. But CMM doesn't use electricity. It doesn't use electroplating cells. So, that's the area we want to go in, and we've had great success so far in that area. So we want to do a lot of R&D on CMD this year.
Larry Reaugh is CEO of American Manganese, Inc. He is online at AmericanManganeseInc.com. Hey, Larry, always a pleasure. Good to talk to you again.
Well, thank you. It was good talking to you.
Thanks to our guests, Peter Schiff, Robert Campbell, and Larry Reaugh. And thank you for listening. I'm Phil Mackesy for AmericanManganeseInc.com. We're back next week with more This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.